When buying a home, usually the biggest concern is going to be the down payment and the closing cost amount. Although a lot of home buyers do qualify for some of the down payment assistance programs, some people still may need to receive funds from family members. In this video, I'm going to be talking about 5 common mistakes people use when they receive gifts to purchase their home. My name is Carl Snell. I'm a local realtor right here in Chicago. I help people buy and sell homes. If there's anything that you need, any questions, feel free to reach out. My information is down below in the description. So the first mistake a lot of people make is they don't speak to the lender first. So when you're receiving gifts, you have to speak to the lender and let them know about what you're gonna do. Some buyers do jump the gun. They request the money first and they hadn't spoken to the lender about it. So this can cause a lot of problems for you because the underwriters are gonna request bank statements from you. And if they see a lot of large deposits, those are gonna cause a lot of red flags. So you must speak to your lender about receiving the gift funds. The second mistake a lot of people make is they don't explain to the donor the lender requirements. Now, if you're gonna be receiving gift money, even though it's a person that you trust, you have to understand that a lot of people are private about what they do and they may not want to share their information to someone that they don't know, okay? So if you're gonna receive the gift, usually the underwriter is going to request documents from the donor and they're gonna wanna see their bank statements or whatever accounts that they use to pull the money. And if you don't explain that to the person that you're getting the money from, they might not want to give that information over. So, and if they don't, well, you're not gonna be able to use the funds. So you definitely want to make sure that you explain everything to the donor so when that time comes, there's no issues. So number 3, and one of the common mistakes that people make when they receive funds is going to be documentation. So documentation is crucial when you're receiving gift funds. Due to the Patriot Act, a lot of financial, well, not a lot, all the financial institutions had to develop anti-money laundering procedures. So this is the reason why now you can't go to a bank and just deposit $20,000 because that has to be reported to the federal government. So the same thing applies here is when you are receiving these funds, everything has to be documented. So they're gonna want to know the person's name, the address, the amount that you're gonna receive, and the accounts that is gonna come from. So when you get these funds, you have to make sure that everything is documented or you won't be able to use the funds. So number 4 on the list is gonna be using unqualified donors. Now, if you're familiar with life insurance, you've probably heard of a term called insurable interest. Now, even though we're not talking about life insurance, insurable interest, that concept still applies to using gift funds. So anyone that you are receiving funds from, they have to have some sort of interest in you. So whether it be a parent, a sibling, a family member, a loved one, like your spouse, those people are fine. You just can't, receive gifts from a friend of a friend or a friend of your cousin. It just has to be a person that's, that's close to you. They just can't be someone that you hardly know. So last but not least is number 5, and that's waiting way too late to deposit the money into your account. Now, although you're still gonna close on the home, waiting to the very last minute to start putting the money into your account because some lenders do want to see the money put into your account a certain way, that's just gonna cause delays. And delays means extra work for you, the attorney, the lender, and the agent. And that's just something that we want to avoid. So when you are receiving the gifts, you want to make sure that you put the money to your account the exact way the lender tells you to and at the exact times that they tell you to do so. So you don't wind up prolonging your closing date because you just don't know what the seller is doing. So if the seller is waiting to sell their house to buy another, a loan delay just could, set off a chain reaction that you could avoid. So make sure you follow the lender's instructions, deposit the money the way that they want you to, and close on your home. So that's all I have for you guys today. I hope that you did enjoy the video. As always, any questions, feel free to reach out to me. My information is down below. Like, share, and I hope to see you guys soon.